I will explain each and every option. So let's get started with our first question that we had. So basically, question is, when opening an account for a trust, which of the following is not one of the required certified documents or equivalent e-documents to be obtained by the reporting entity? Option A, registration certificate of the trust. So remember, which of the following is not? This is the keyword, right? Let me highlight it. So option A, registration certificate for the trust. Option B, trust deed. Option C, PAN or Form 60. And option D, memorandum or accession of trust. So let's look at each and every option. First of all, option A. What about the registration certificate of the trust? Do you think that it is required? What do you think about it? Yes, this is required. It is required. Why? Because this certificate proves that trust is legally registered. Because this particular certificate proves that trust is legally registered. That's right. Yes, registration certificate of the trust is required. Yes, because this proves that trust is legally registered. Without it, the bank cannot confirm the legal existence of the trust. What about the trust deed? Yes, I think trust deed is also mandatory. Just like an individual, a trust also need a tax identity, right? So that is the point. So basically, trust deed is like the constitution of the trust. So you can think of the constitution of the trust. It explains why the trust was formed, right? What power, who the trustee are, what power they have. Bank need this to know how the trust will operate. The third is PAN and Form 60 of the trust. Yes, this is also required, right? Just like individual, a trust also need a tax identity. So either a PAN card or Form 60, PAN is not available, it must be submitted. What about option D? A memorandum of and accession of trust. This is not required, right? So remember, MOA and AOA, these things are not required to the context of trust. Because memorandum of association or MOA is for companies and societies. So they are mandatory for, companies. They are mandatory for societies, right? Not for trust. That's why it is not required for opening a trust. So the correct answer is option number D. Yes, this is the correct answer. So what we have learned, for trust account, bank need registration certificate, trust deed, PAN and Form 60 and detail of the trustee. MOA is for company, not for trust. So that is the point. Now friends, let's look at the next question. The next question that we have is related to the designated director. Very important one. Let's understand it. So we are going to crack an important MCQs under the designated director. So which of the following statement correctly describe the role and eligibility of a designated director under PMLA, PMLR and the regulatory guidelines? Option A. A designated director must always be the chairman of the company regardless of the structure and is only responsible for ensuring the audit compliance. Option B. A designated director may be the MD, may be MP, may be managing trustee or a senior management individual and is responsible for overall compliance including the KYC system. Option C. Designated director is a junior compliance officer who files suspicious transaction report and does not need to be formally authorized by the board. And option D. Any employee of the bank can be nominated as a designated director provided they have the knowledge of the customer service and branch operation. What do you think? Let's go through each and every option. First of all, let's start with option number A. What do you think about option number A? So option number A says that DD must always be the chairman. This is wrong. DD is not always the chairman. It depends on the types of organization, right? And it says that it ensures, option A says that he must be chairman. No, DD role is much wider than just audit. It's all about full compliance with PMLA, KYC, AML system. Let's look at option number B. Option number B is correct. Yes, this is the correct one. Why it is correct? Because managing director in a company, right? Managing director in a company, managing partner in a partnership firm, proprietor in a proprietorship, and managing trustee in a trust, right? Or senior management individual in cooperative bank and RRB. So, and the responsibilities, they ensure compliance with the law, right? They ensure overall compliance. They ensure updating KYC, staff training, take measures against money laundering, and terror financing risk. What about option C? Option C says that DD is a junior compliance officer filing STR. That is not true. That is wrong. Because filing STR is usually the job of PO. Remember, suspicious transaction report is to be filed by the PO. Who is PO? PO is called the principal officer, not the designated director job. So DD has a higher role, right? DD has to ensure the accountability at the top, right? So filing, this filing has to be done by the, PO. PO means, you know what is the meaning of PO? PO means principal officer. Now what about option D? It says any employee. This is wrong again. It has to be someone at the top management level. it says any employee, it is wrong. It has to be someone at the top management level, right? Not just any staff who know the customer service. So what we learned from this discussion is that, that designated director, remember this DD, he is the top level person. He is the top level person who is responsible for PMLA and KYC compliance. And position depends on structure. So you can see position may be MD, you can see MD, MP, right, proprietor, MT, anything. Responsibility includes KYC system, staff training, policy update, and MLTF measure. And DD is not principal officer. Remember, DD is separate than the principal officer. Those two are separate. DD is not principal officer. DD is accountable at the top. PO is more operational. Now friends, let's look at the next MCQ that we have. So friends, before proceeding to the next MCQ, let me tell you, if you want any kind of study material for the AML KYC in the form of unit-wise theory, which is made from the Macmillan book, or if you want unit-wise MCQs, which consist of 50 MCQs, average 50 MCQs per unit, almost 2000 plus MCQs in the entire syllabus. If you want previous year memory-based question like this, you can enroll in our course of AML KYC, which is available at reasonable rate. For more detail, you can WhatsApp me on this particular number, right? You can WhatsApp me on this particular number for more detail. In the description section of the video, you will also get the course link. Now friends, let's look at the next question. This question pertains to the primary function of FIU-IND. So we will solve a very important MCQs on FIU-IND. Which of the following is the primary function of FIU-IND under the PMLA, right? So question is asking you to find the primary function of FIU-IND under the PMLA. Options are regulating monetary policy and setting benchmark interest rate. Option B, collecting, analyzing, disseminating information on suspicious financial transaction. Option C, issuing banking license and supervising the credit policy of the bank. Option D, managing foreign exchange reserve of the country. Let's go through option by option. First of all, option A. See, this is actually the job of RBI, right? Monetary policy monitoring, job of the RBI. For example, RBI decide repo rate, reverse repo rate to control inflation and liquidity. Second is collecting, analyzing, disseminating information. Yes, this is exactly what FIU-IND does. Imagine a bank notice a customer, notice that a customer deposit 10 lakh rupees. Bank notice that customer has deposited 10 lakh cash every day without any clear source. Customer is depositing 10 lakh cash every day without any clear source. So the bank report it as an STR, that is called suspicious financial transaction report, right? FIU-IND then collect it, analyze the pattern and share the intelligence with the enforcement agency like ED, CBI or income tax department. Option C say issuing banking license and supervising the credit policy of the bank. Again, this is the role of RBI, right? RBI give license to the new bank and decide how much credit flow should be regulated. FIU-IND does not guarantee license. What about the last part, managing foreign exchange reserve? So this is also the job of RBI, right? Foreign exchange reserve managing is the job of RBI. RBI manages forex reserve to keep the rupee stable. FIU-IND is not involved here. So what we learned from this discussion is that, whenever you see this word FIU-IND, just remember, this is called Financial Intelligence Unit India. It was formed in the year 2004. It worked under the Department of Revenue. And Ministry of Finance. And its role is to collect, analyze and disseminate information on suspicious financial transaction. Report it handle like CTR, like STR, right? NTR, CBWTR. Now friends, let's look at the next question. The next question is, as per the section 4 of the PMLA, what is the prescribed punishment for committing the offense of money laundering? So let's see the option that we have. These are the 4 options that we have, right? So basically the first option says simple imprisonment of not less than 1 year, but which may extend to 3 years with fine. Option B say rigorous imprisonment of not less than 3 years, but which may extend to 7 years and also liable to fine. Option C say rigorous imprisonment of not less than 5 years, which may extend to 10 years with fine. And option D say simple imprisonment of not less than 2 years, which may extend to 7 years with no fine. So these are the 4 options that we have. So let's see the answer. Let's see the option by option. Option number A, simple imprisonment of not less than 1 year. See, this is wrong. Option number A is wrong. Why it is wrong? Because this is incorrect. Because the punishment under PMLA is not simple imprisonment. It is a rigorous imprisonment. So remember, if you do any punishment under PMLA, it is just a rigorous right? It is rigorous imprisonment. It is not simple imprisonment. Rigorous means tough jail time with hard labor, not just sitting in the prison. Right, what about option B? Option B is a rigorous imprisonment but not less than 3 years, but which may extend to 7 years. Yes, correct. This is the correct one. This matches the section 4 exactly. Minimum punishment 3 years, maximum punishment 7 years, and yes, fine is also applicable. Option C say rigorous imprisonment of 5 to 10 years with fine. This look attractive because sometimes people remember 10 years, right? But that is a special case, only for certain offense like narcotic case under the NDPS Act. So this is only for narcotic case under the NDPS Act. Right. In general case, it is 3 to 7 years. And option D say simple imprisonment of not less than 2 years, which may extend to 7 years with no fine. Again wrong, because the imprisonment is rigorous, not simple. And the fine is definitely applicable under PMLA. So what we have just discussed, let me just summarize. I told you, we have talked about the section 4 of the PMLA, right? So this section 4 of the PMLA, it talks about, punishment for the offense of money laundering. Normal rule is rigorous punishment, rigorous imprisonment, 3 to 7 years plus fine, right? So 3 to 7 year rigorous imprisonment plus also fine is applicable. Okay. For some serious offense like narcotic, narcotic under NDPS, the punishment can go up to 10 years. But the general is 3 to 7 years. In a special case, it can go up to 10 years. Now friends, let's talk about the one question on which of the following correctly explain the social and political effect of the money laundering. Very good question. Basically, option is which of the following correctly explain the social and political effect of the money laundering in a jurisdiction where it is not effectively controlled. Option A, it results only in the loss of government revenue but has no impact on crime or politics. B, it increases corruption and organized crime. It creates safe haven for criminals affecting the social environment. Option C, it primarily weakens the banking sector but leaves society and governance structure largely unaffected. It strengthens the democracy by bringing illicit fund into the circulation and boosting the political funding. Very good question. Which of the following correctly explain the political effect? So option number A, if you look at the option number A, which says that it only causes revenue loss, nothing else. What do you think about it? This is incorrect. Why? Because the effects are much deeper than the tax revenue. It only talked about the tax revenue, but the effects are much deeper. Right? Money laundering spread corruption, strengthen criminal, weaken governance. Yes, that is what it does. So that's why option number A is wrong. It just talks about loss in government revenue. No. What about option B? Yes, option B is the correct one. Why option B is the correct one? Because money laundering is when money laundering is unchecked, corruption grow because corrupt officials hide their wealth. Corruption will grow. Right? Why? Because corrupt officials will hide their wealth. Organized crime will increase. Right? And such country becomes safe haven for criminal. They become safe haven for criminal. And the worst part is that over time, these criminals start influencing politics, weakening institutions, and even threatening the democracy. Right? So these are the things. Influence and even undermine the social, political, and democratic system. What about option C? Option C say it mainly weaken bank, but society and politics remain safe. See, this is not correct. Banking weakness is one effect. Right? Banking weakness is one effect. But the bigger danger is corruption. Right? The bigger danger is corruption, social damage, and political influence. What about option D? Option D say it strengthens the democracy by boosting the political funding. See, that is completely wrong. Illicit fund does not strengthen democracy. They undermine it. Illicit fund. Illicit fund, what it does? It basically undermines the democracy. Right? Because dirty money buy power and control. So let's quickly summarize the key point. Yes, we talked about the social effect. See, it has both social effect as well as the political effect. How is the social effect? Yes, social effect is that more corruption, more organized crime. First of all, corruption is a kind of social effect. Second example I can give you is organized crime. Organized crime also happen. And it is a safe haven for criminal. Second is political effect. If you look at the political effect of it, so criminal gain influence. Criminal gain influence. It weaken our institutions. Our institutions become weak and can even erode the democracy. So money laundering is not just a financial crime. It is a threat to society, politics, and national security. I hope it is clear. Now the next question that was asked, that as per the given information, how many members does the Egmont group of FIU currently have. This question is most frequently asked. Egmont group is the most frequently asked question. I request you to please learn it wholeheartedly. Egmont group. Right. Options are 101 member, 121 member, 151 member, and 181 member. So, basically, how many members are there? Do you know? The correct answer to this question is 151 member. So, the Egmont group is an international network of financial intelligence unit established to strengthen the cooperation in the fighting money laundering and terrorist financing. Right. So, its objective includes from bank make up the membership of Wolfsberg group. And so, basically, this was the question which was asked in the examination. Options are 10, 13, 15 and 20. Let's understand each option carefully. First of all, option A. Option A say 10 global bank. So this option look close, but it is not correct. The group is slightly bigger, not 10. What is the option B? Option B says 13 global bank. So this is the correct answer. The Wolfsberg group is made up of 13 leading global banks formed in the year 2000. It was formed in the year 2000. There are 13 global banks. Right. They came together to fight the financial crime like money laundering and terror financing. So like money laundering and terror financing. Okay. So 13 leading global bank. What about option C? 15 global bank. Again sound possible, but the number is not 15. Some examiner put nearby number to confuse us. What about option D? It says 20 global bank. See, basically definitely too high. The Wolfsberg group is exclusive, not such a large membership body. So you can think of the Wolfsberg group like the Avenger of the banking world. 13 powerful global banks united to protect the financial system from criminal. So let's quickly summarize the key point. What we have discussed. It is an association of the 13 leading global banks. First point. It was formed in the year 2000. It focuses on anti-money laundering and KYC and terror financing, CFT, countering the financing of terrorism. Right. So whenever you see this in exam, remember 13 bank fight financial crime together. Okay. Now let's look at the next one. This question is regarding the UCIC. So friends, today we are discussing a very important question related to UCIC, which is Unique Customer Identification Code. So which of the following correctly explain the provision regarding the UCIC as prescribed for bank and NBFC? Options are UCIC must be allotted only to the new customer opening account in the bank while existing customer are exempted. Option B, it is mandatory for both new and existing customer but not required for walk-in and occasional customer. Right. So for both new and existing customer but not required for walk-in or occasional customer such as purchaser of prepaid instrument. Option C say UCIC is optional for all customer and bank NBFC may decide whether to issue it depending on their internal policy. And option D say that UCIC can only be issued to corporate customer, not individual, since it is linked to business entity identification. So let's understand each option one by one. First of all, option number A. What do you think about option A? This is wrong. Why? Because RBI say UCIC has to be given to both new and the existing customer. What RBI say? That UCIC must be allotted to both the new customer as well as the original customer, existing customer. Okay, as well as the existing customer. Existing customer also need to be covered over the time so that same customer can be uniquely identified across all product and services. So that's why option number A is wrong. What about B? B says that it is mandatory for both new and existing customer. Yes, very good. It is correct one. This is correct because regular customer must always have UCIC. But for one-time customer, which we call walk-in occasional customer, we can also call them one-time customer. Okay. So for one-time customer or walk-in or occasional customer, like someone buying a prepaid card or one-off product, UCIC may not be issued immediately. However, if that customer keep coming back, then UCIC become mandatory. Imagine someone buys a prepaid gift card once. No UCIC is required. Right? Someone who is buying a prepaid gift card once, in that case no UCIC. But if that same person keep coming every week to buy multiple products, the bank will assign them a UCIC to track transaction properly. Okay, so that is the point. Now, what about option C? Option C says UCIC is optional for all customer and bank NBFC. No, this is completely wrong. Because UCIC is mandatory as per RBI. What about option D? It can only be issued to corporate customer, not individual. Again, it is wrong. UCIC is for all type of customer, individual, corporate. The whole idea is to uniquely tag every customer in the system. So remember what we have discussed just now. Remember the full form. Unique customer identification code. it is mandatory for all the regular customer and not required for walk-in or occasional customer. Purpose is better customer data management, risk profiling, and monitoring suspicious data. Now, one question which was asked based on UAPA. Let's have a look. So the question is, which of the following correctly describe the key feature of the Unlawful Activities Act or UAPA as amended? So these are the options that we have. So option number A says that UAPA enacted in 1967 focuses only on unlawful political association and has no provision relating to terrorism or financing of terrorism. Option B say UAPA amended in 2008 incorporated measures to combat financing of terrorism in line with UN Security Council resolution. Option C say UAPA amended in 2013 was diluted to reduce its scope and exclude property seizure connected with terrorist organization. Option D say UAPA only applied domestically and has no connection to international obligation such as FATF standards. So what do you think is, which option do you think is correct? So option number A. Option number A says that UAPA was only about political association and nothing to do with terrorism. What do you think about it? This is wrong. Option A is wrong. Why? Basically UAPA started in 1967. This is correct. Yes, it was enacted in the year 1967. This is correct. Right. Basically it was enacted mainly to deal with unlawful political association. The full form itself say unlawful. What is the full form? Right. Unlawful Activities Act. So it was enacted in 1967 to deal with unlawful political association, but later it was expanded. After the 2008 amendment, terrorism and terrorist financing become a major part of the act. So two things. Right. Let me write it down. So two things become the major part. The first thing is, terrorism. Right. Terrorism. And the second point is terror financing. These two become the part and parcel of the act. So that's why option number A is wrong. It focuses only on the unlawful political action. This is wrong. It has to do with terrorism also. What about option B? It says that it was amended in 2008, incorporated measure to combat financing of terrorism. Yes, this is the correct one. Right. So this is absolutely correct. If someone raises fund in India to support a terrorist group abroad, right. Also, if a property like house or land is linked to terrorism, the government can freeze or seize it. What about option C? It says that 2013 amendment diluted the law and reduced its scope. See, this is completely wrong. This is wrong. Why? Because the 2013 amendment actually made the act stronger. The amendment which happened in 2013, it made the act stronger. Right. It made the act stronger, bringing in line with FATF standard. It bring in line with the FATF standard. FATF, Financial Action Task Force, to fight money laundering and terrorist financing. It was not diluted. It was tightened. Right. It is saying that it was diluted to reduce its scope. No. It was not diluted. Rather, it become more tight. What about option D? It says that UAPA apply only inside India and has no international link. This is completely wrong. Why? Because UAPA amendment were specifically made to align with the international obligation. International obligation like, UN Security Council resolution. UN Security Council resolution and, FATF recommendation. So let's quickly summarize the key point. What I have told you, that UAPA is a law to curb unlawful activities and terrorism. Right, remember, it is a law to curb unlawful activities and terrorism. 1967, it was originally an original act, right? And 2008 amendment was there, which included terrorism and terror financing in line with the UN resolution. 2013, it was amended, right? When it was amended in the year 2013. 2013, it was amended, right? Which further strengthened the law to meet the FATF standard, right? I hope it is clear. Now, let's see the last question of today's session. The last question is, as per KYC norm, what is the time limit for submission of an officially valid document by low-risk customer who are unable to provide it immediately but need to open a bank account without interrupting business? Right, this is the question. Option A, it must be submitted within 3 months from the commencing the relationship. It must be submitted within 6 months from commencing the relationship. It is not required at all for low-risk customer once the relationship is established. And D say, it can be delayed indefinitely subject to the bank approval. So, which option do you think is correct? So let's look at option number A. It says within 3 months. What do you think about 3 months? No, this is incorrect. It looked tempting because 3 months is a common timeline in some compliance area. But the rule is not 3 months. What about 6 months? The rule is that if the customer is of low risk, right, like a salaried person opening a saving account, or someone with a small bank balance account, so the bank can open the account immediately, right? But the customer must submit their OVD within the 6 months. timeline. For example, take the case of Ramesh. Let's understand with one example. Take the case of Ramesh. Now Ramesh, right, is a salaried employee. He want to open a bank account, but he has misplaced his Aadhaar card. So the bank can open his account today, but Ramesh must give Aadhaar card or another OVD within 6 months. So remember the 6 month timeline is there. So let me highlight the keyword 6 months. Right. What about not required at all? Option number C, this is wrong. Option number C is wrong because it said not required at all. C, KYC is mandatory for all customer. Even low risk customer must eventually provide OVD. What about D? It can be delayed indefinitely. There is no such thing like indefinite relaxation. The maximum time limit is 6 months. And after that, if documents are still not provided, the bank must freeze or restrict operation. So what we have discussed just now, let me summarize. I told you that bank can open account immediately for low risk customer, even without OVD. But OVD must be submitted within 6 months. After 6 months, if OVD is not given, the bank must take regulatory action. Correct answer is option B. Friends, we have more questions available with us, and that is memory based. If you want me to bring the part 2 lecture of this video, please write yes in the chat box. I will provide you the part 2 video. And if you really think that this video was which of the following statement about the Egmont Group of Financial Intelligence Unit is correct, right? So option A, say it is a formal organization established by the United Nations to regulate the banking system. Option B, it is an informal network of FIU aimed at promoting cooperation in information exchange, training and sharing of expertise. Option C, membership in the Egmont Group is optional for FIU under the FATF 2012 standards. Option D, it has published only the Egmont Charter and nothing else and currently has 100 members. Very good question it is. So let's see option wise. First of all, option A. Why this is wrong? Because the Egmont Group is not a UN body. It says United Nations body. No, it's not a UN body. First of all, it is not an informal organization. Rather, it is an informal organization, not a formal. It does not control bank, right? It said to regulate banking system. No, the Egmont Group does not control bank. Rather, it helps financial intelligence unit share information to catch criminal. You can think of it like a WhatsApp group of detectives from different countries. They share tips but don't make laws. Now let's look at option number B. Option B say it is an informal network of FIU aimed at promoting cooperation in information exchange, training and sharing of expertise. Why this is correct? Because exactly right. The Egmont Group is like a global club of FIU. Their job is to help each other share information, train and fight financial crime like money laundering. Imagine police from different countries meeting to swap crime fighting tricks. That is the Egmont Group. What about option C? So option C is wrong. Why? Because FATF, that is called Financial Action Task Force, says FIU must join in the Egmont Group. It is not optional. It is a must do to fight money laundering properly. Like how a school requires student to attend class. Similarly, FIU must join Egmont to stay compliant. What about option D? So option D is also wrong because they have published more than just the charter. It says they have published only the Egmont Charter. No, they have published more than the Egmont Charter, like guidelines on the information sharing. They now have 151 members, not 100. That's why option number D is incorrect. Saying they only have one document is like saying YouTube has only one rule. No, there is a way more. So what we learned from this question is that that this Egmont Group is an informal network, not a UN body or not a bank regulator. Their main job is to help financial intelligence units share information, train and fight the financial crime. And the third point I told you that their membership is mandatory as FATF says so. And they are more than just the charter. They have multiple documents and they have 151 members. So the correct answer is option B. If it helps, smash the like button, share with friend and drop a comment. Right. Now friends, let's see the next question. Friends, if you are looking for a study material for AML KYC, then you can WhatsApp me on this particular number. So we have a study material in which we provide you PDF. In PDF includes unit-wise theory, unit-wise MCQs and previous year question. Many aspirants of AML KYC have cracked the exam previously using our material. So you can also join their league. For more detail, you can WhatsApp me on this particular number. Now, let's see the next question that we have. So the question number 2, which were asked in the examination was like this, So we are breaking question is which of the following statement about Wolfsberg group is correct? Option A, it is an association of 13 global banks formed in 2000 to develop framework and guidance for managing financial crime risk, especially in relation to KYC, AML and CFT policy. Option B. It was created by the United Nations to regulate financial institutions worldwide and enforce AML law. Option C. Its primary purpose at inception was to prepare AML guideline for public sector bank. Option D. It only focus on CFT measure and does not issue guidance on KYC or AML. Very good question. This question is regarding the Wolfsberg committee. So option number A is correct, because this Wolfsberg group, it is a club of 13 big banks like HSBC, like Citibank, etc. It was started in the year 2000 to fight financial crime. Their main job was to create rule and best practices for KYC, which means know your customer, checking who client really are. AML, which means anti-money laundering, which means stopping the dirty money, and then CFT, which means counter-terrorism financing, which means the blocking the terror fund. You can think of it like a group of top chefs making food safety rule, but for bank instead of restaurant. Option B says that it was created by United Nations to regulate financial institutions. This is wrong. This is not a UN group. It is a private formed by the bank themselves. Right? It is a private group. They are formed by the bank themselves. UN has nothing to do with that. And second point is that does not enforce law. See, it only give guidance. It does not enforce any law. It is simple example. It's like a car club making safe driving tips, not the traffic police handling out tickets. Option C. Its primary purpose at inception was to prepare AML guideline. This is wrong, because it started for private banking, wealthy clients, not government banks. Right? It is saying for public sector banking. This is wrong. It was started, for wealthy clients, for private banking, not the government banks. Later it was expanded to cover all banking. Like a luxury watch brand, first making rule for gold watches, then later for all watches. What about option D? It only focus on CFT measure and does not issue guidance on KYC or AML. So why this is wrong? Because it cover all the three, KYC plus AML plus CFT, not just terrorism financing. Simple example I can give you. Saying it only does CFT is like saying Netflix only has action movie. No, it has everything. So friends, what we learn from this particular question is that Wolfsberg group is a 13 big bank teaming up since the year 2000. Their main job is to fight financial crime with KYC, AML, CFT guidelines, and they are started for the private banking, now cover all. They are not, not a UN regulator, just a best practice advisor. They are not UN regulator, rather they advise the best practices. Now, then the next question that we have is very good question regarding the CCO, Chief Compliance Officer. So the question is, which of the following is not a duty or responsibility of the Chief Compliance Officer as head of the compliance function? So not a duty. Remember, the keyword is not. Option A say, apprising the board and the senior management on regulation, rules, standards and development. So option B say, conducting an annual compliance risk assessment and preparing a risk-oriented activity plan for the approval by the ACB Audit Committee Board. Option C, monitoring and periodically testing compliance and placing results before the board. Option D, approving and introducing new financial product without consulting other department. Option E, ensuring time-bound and sustainable compliance with RBI supervisory observation and other official direction. So let's see the option number A first. So is this a real duty? Yes. What does this mean? The CCO is like a news reporter for rules. They update the board, they update the CEO on the new laws and the risk. For example, if RBI changes a rule, the CCO must inform the top management. So you can think of them like, a weather forecaster, warning the company about regulatory storm ahead. What about option B? It says conducting annual compliance risk assessment and preparing a risk-oriented activity plan for approval by the ACB. Is this a real duty? Yes. It means that CCO does a yearly health check on compliance risk. They make a plan to fix gap and send it to audit committee. For example, like a car mechanic doing an annual inspection and suggesting the repair. What about option C? Monitoring and periodically testing compliance and placing result before the board, ACB, MD and CEO. Is this a real duty? Yes. The CCO check if the rules are being followed or not. They report finding to the big boss like board, like the CEO, like a school inspector checking if the teacher follow the curriculum or not. What about option D? Approving and introducing new financial product without consulting other department. So is this a real duty? No. Why this is wrong? Because the CCO does not launch product alone. That's the sales or risk team job. Their role is oversight, not business decision. You can imagine a referee in a football. Their job is to enforce the rule, not to score the goal. What about option E? Ensuring time-bound and sustainable compliance. Yes. Is this a real duty? Yes. What does this mean? Because if RBI say fix this, so the CCO makes sure that it gets done properly and on time, like a project manager ensuring deadlines are met. So what we learned from this question is that CCO acts like a rule enforcer, not a product creator. Their main duties is to report new regulation, that is our option A, is to yearly risk check, that is the option number B, is to monitor compliance, that is the option number C, is to ensure that RBI orders are followed, that is option number E. But what is not their job? Launching product alone, that is not their job. So the correct answer is D. The CCO does not approve products solo, rather they are the company's rule guardian, right? I hope this helped you understand the basic concept regarding the function of CCO. If it really does, please hit that like button and share with other aspirants who are preparing for the AML KYC examination. Friends, I have prepared one more set of questions. If you have not watched that video, please check out the description section of this video. I have provided the link of the same. And also we have a Telegram group in which we post quizzes, in which we post memory based questions, topics, and every information related to the examination. You can join that. It's completely free of cost. Now friends, let's talk about the next question. So the question is, which statement accurately represent the United Nations Vienna Convention against illicit traffic in narcotic drugs 1988? Very good question. Accurately represent. Which one is correct is being asked. Option A, it mandates the UN Office on Drugs and Crime to establish program for countries to prevent drug trafficking. Option B, it requires law criminalizing the conversion or transfer of property derived from drug trafficking and related offense. Option C, it provides for mutual legal assistance, transfer of proceeding, international cooperation among nations. Option D, it was the first step to establish a legal regime for the prevention of money laundering. So let's see the option. Option number A suggests that it mandates the UN Office on Drug and Crime, that is called UNODC, to establish program for country to prevent drug trafficking. Is it true? Yes. What does this mean? That UNODC was tasked to create anti-drug program for the nation. For example, training police to track drug cartels. It's like a global coach helping country fight drug crime. Similarly, this also. What about option B? Option B says it requires law criminalizing the conversion or transfer of property derived from drug trafficking. Is this true? Yes, it is true. What does this mean? That means country must ban laundering drug money, that is turning cash into fake business. For example, a law making it illegal to hide drug profit in the real estate. Simple analogy, like making it illegal to wash dirty cloth, but for money. What about option C? It provides for mutual legal assistance, transfer of proceeding, international cooperation. Is it true? So what we are discussing on, we are talking about the UN Vienna Convention against illicit traffic in narcotic drugs. Is it true? What about option C? Yes, it is true. It means that country must help each other catch drug lots, like extradition, sharing evidence. For example, the US and Mexico collaborating to arrest a cartel leader. Then we have option number D. It was the first step to establish a legal regime for preventing money laundering. So we are talking in the context of UN Vienna Convention. Yes, it is true. This was the first global treaty targeting drug-linked money laundering. Later, FATF expanded this rule to all the crimes. Right. So all of them are correct. So option number E is the correct one. So what we'll come to know that the first option. What is the key takeaway? UNODC. Remember the full form. United Nations Office on Drug and Crime. So this program help country fight drug trafficking. Option A. Option B, criminalizing dirty money. So ban hiding drug profit. Option C, global teamwork. It forces cross-border cooperation. Pioneering the anti-laundering, which means first treaty that targeted the drug money. And all are correct. So these are all the points related to the UN Vienna Conventions. I hope it makes sense to you. Now friends, have a look at the next one. Very good question it is, and this question is most frequently asked. So question is, which of the following statement? So the question is, which of the following statement about the Unlawful Activities Prevention Act 1967, in short we call it UAPA, is correct, right? Option A, that UAPA was amended in the year 2008 to include legislative measure for combating financing of terrorism consistent with the UN Security Council resolution, right? Then the act criminalized terrorist act and raising of fund for terrorist act. Option C. It provides for attachment and seizure of property connected with the terrorist activity or organization. Option D. The 2013 amendment enhanced the act to strengthen prevention of unlawful activities and to meet the FATF standard. Option E. All of the above. So we'll have a look at this particular question. So let's see the option number A. The UAPA was amended in 2008 to include legislative measure for combating financing of terrorism. What does this mean? It says that in 2008, India updated the UAPA to stop terror funding as per the UN rule. What is UAPA? Unlawful Activities Prevention Act. Yes, India amended it, right? For example, if a group fund terror activity, the law cannot punish them. Like updating your phone antivirus to block the new threat. So what about option number B? Option number B says, that the act criminalizes terrorist act and raising of fund for terrorist war. Yes, this is correct. It means UAPA bans terrorism and collecting money for terror. For example, if someone fund a bomb attack, they can be jailed under UAPA. Like making both robbery and hiring robber illegal. What about option C? It provides for attachment and seizure of property connected with terrorist activity or organization. Is this correct? Yes, it is correct. It means that police can freeze properties linked to the terror group. For example, if a terror group owns a house, the government can seize it, like confiscating a thief's stolen car. What about option D? It says the 2013 amendment enhanced the act to strengthen prevention of unlawful activity and to meet FATF standard. Is it correct? Yes, it is correct. It means, in 2013, India make UAPA stronger to stop terror funding as per FATF rule. For example, bank now reports suspicious transaction linked to terror, like adding new security camera in a high crime area. So the correct answer to this question is all of the above, right? So A, B, C, D all are true. So answer is E. So what is the key takeaway from this question is that 2008. So we are talking in the context of UAPA. What is UAPA? Unlawful Activity Prevention Act 1967. In the year 2008, there was an update. Just I'm taking you the key takeaway, right? I'm summarizing the fact. In the year 2008, UAPA added anti-terror funding rule, which is backed by UN. It bans terrors, it bans funding, it punishes both act and money raising. Property seizure, I told you, government can freeze terror-linked asset. 2013, it was again updated, made law stronger to meet the global standards. 2013 amendment enhanced the law to strengthen, to meet the global standard that is called FATF standard. So the correct answer is all of the above. Right, so UAPA is a very, very powerful law against the terrorism. If it helps, to smash the like button. Now friends, have a look at the next one. So this question is regarding the CCR. Yes, very good question it is. So the question is, which statement about counterfeit currency report, or we call it CCR, is incorrect. Right, option A, CCR cover all cash transaction where counterfeit currency notes have been used. Option B, CCR also covered transaction involving forgery of valuable security or a document that facilitate the transaction. Option C, the report is required to be submitted monthly by the 15th of the next month. Option D, CCR must be filled immediately on the same day the counterfeit note is detected. So these are the options, and question is asking you to find the incorrect one. So let's see the option A. Option A says CCR covered all cash transaction where counterfeit currency notes have been used. Is this true? Yes, it is true. What does this mean? It means that if fake cash is used, even rupees 100 rupees note, bank must report it via CCR. For example, suppose a shop deposit 10,000 rupees, but 2,000 rupees is counterfeit. So CCR has to be filed. Like a fake ticket at a concert, security must be alerted. What about option B? So if you look at the option B, it says that CCR also covered transaction involving forgery of valuable security or a document that facilitate the transaction. Is it true? Yes, it is true. What does this mean? It means that beyond fake cash, CCR include forged check, bond, fake ID, which is used in the transaction. So beyond fake cash, CCR include forged check, bonds or fake ID. For example, someone deposited a fake fixed deposit receipt. So CCR has to be filed. For example, I will give you an example like reporting both fake money and fake passport at the airport. What about option C? The report is required to be submitted monthly by the 15th of the next month. Is this true? Yes, it is true. This means that bank don't report daily. They compile cases and submit by the 15th of next month. For example, July fake note are reported by the August 15, like submitting a monthly school attendance report, not every day. What about option D? CCR must be filed immediately on the same day the counterfeit note is detected. Is this true? No, this is incorrect. Because CCR is not a same day, it is a monthly by the 15th. Only urgent report like terror funding needs immediate filing, not CCR. Imagine reporting exam cheating monthly. versus calling police right now for a fight. So what is the key takeaway from this question is that, so option number D is the correct one, right? This is incorrect. So what we learned that CCR cover fake cash and CCR cover the fake document. Option number A is about fake cash. Option number B is about the fake document. Reporting timeline for CCR is monthly by 15th, not same day. So option number C is regarding monthly by 15th and same day, that is option number D is incorrect, right? So the incorrect statement is D. CCR is monthly, not the instant. Remember the full form, counterfeit currency report, right? Now have a look at the next question. This question is regarding which of the following statement about the USA PATRIOT Act. You know, in your book there are some act which has been given and they are the super important. Question are asked every year, every examination regarding these acts. So you must make sure to go through these acts. Question is, which of the following statement about USA PATRIOT Act of 2001 is correct? Options are, it criminalized the financing of terrorism and strengthened customer identification procedure. Option B, it prohibit dealing with foreign sale bank and require enhanced due diligence for correspondent and private banking account. Option C, it improves information sharing between financial institution and the US government, including voluntary sharing among institution. Option D, it imposes special measure on jurisdiction or transaction deemed primary money laundering concern and uses a bank AML record as a criteria for merger and acquisition. Very good question it is, right? So option A, let's start with option A. It criminalized the financing of terrorism and strengthening customer identification procedure. We are talking in the context of USA PATRIOT Act. Yes, it is correct. The act made it illegal to fund terrorism, like giving money to terror group. Bank now verify customer more strictly, like making it illegal to pay a hitman and requiring ID check at the bank. Option B, it prohibit dealing with foreign sale bank and require enhanced due diligence for correspondent and private banking account. Is this correct? Yes, it is. What does this mean? Sale bank are the fake bank with no real office. They are banned. Bank must double check high risk account, like foreign client account. For example, like banning fake company and doing extra background check on suspicious client. Option C say it improve information sharing between financial institution and the US government, including voluntary sharing among. CFATF is an organization of 27 Caribbean basin state established in the year 1992. Option B, in May 1990, a representative from the Caribbean and Central America identified 19 region-specific issues which were adopted in the November 1992. Option C says CFATF issues public statement reviewing the jurisdiction based on measures taken to address deficiency found in mutual evaluation. Option D says CFATF primarily work on drug trafficking prevention and does not focus on financial crime. Option E say A, B and C are correct. So let's see which option is correct regarding it. So let's see the option number A. Option number A is that it is an organization of 27 Caribbean basin state established in 1992. Is it correct? Yes, it is correct. What does this mean? It means CFATF is a group of 27 Caribbean or Central American country working together. It was founded in the year 1992 to fight money laundering and terror financing, like a neighborhood watch group but for financial crime in the Caribbean. What about option B? Option B says in May 1990 representative identified 19 region specific issue adopted in November 1992. Is this correct? Yes, it is correct. What does this mean? Because it means that in the year 1990, Caribbean leaders listed 19 unique problems like cash heavy economy, tax haven. By 1992, these become official rule for the CFATF, like a team brainstorming solution before launching a product. What about option C? Option C says the CFATF issues public statement reviewing jurisdiction based on measures taken to address deficiency. Is this correct? Yes, this is correct. Why? Because it means CFATF grade country on anti-money laundering effort. If a country fails, they are publicly named and given time to improve. For example, like a report card for country, pass or fail with consequences. What about option D? The CFATF primarily work on drug trafficking prevention and does not focus on financial crime. Is this correct? No, this is the wrong option. Why this is incorrect? Because CFATF does not just focus on drug, it tackles all financial crime, money laundering, terror funding, etc. And it follows the FATF standards, global anti-money laundering rules. Like saying CFATF only fight drug is like saying a firefighter only put out kitchen fire. No, they handle all kinds of fire. Option E, A, B and C are correct. So yes, this is the correct answer. Since A, B and C all are true, D is false. So E is the right answer. So what we let's summarize what we get to know from this particular question. I told you that CFATF is a combination of 27 Caribbean nations fighting the financial crime. That is option A. It was founded in the year 1992 based on 19 regional issues. Option number 2. Option C says publicly rate country. Yes, it publicly rate countries on anti-money laundering progress. That is option C. Option D, not just drug. It cover all types of financial crime. Right. So the correct answer is option number E. A, B and C are all correct. Now friends, the question is which of the following statement about sale companies and sale bank is incorrect. Option A sale company generally conduct no real business operation and may exist only on paper. Option B, sale company can be used to create an appearance of legitimate transaction through false invoice and fake financial statement. Option C, sale bank are bank without real banking activity and can be used to launder money. Option D, sale company can only be used during the layering stage of the money laundering and have no role in the placement or integration stage. So which one is incorrect is being asked. So let's go through each and every option. So what option A? A sale company generally conduct no real business operation and may exist only on paper. Is this correct? Yes, it is correct. What does this mean? So sale company are fake businesses, no office, no product, just paperwork. For example, a company with a fancy name but zero employee or zero sales, like a movie set. It look real but it just facade. Then option B, sale companies can be used to create an appearance of legitimate transaction through false invoice and fake financial statement. Is this correct? Yes, it is correct. What does this mean? It means company use them to fake transaction. For example, a drug cartel sell imaginary goods to justify dirty money, like a fake receipt to claim you bought a laptop you never owned. What about option C? Sale bank are bank without real banking activity and can be used to launder money. Is this correct? Yes, it is correct. What does this mean? It means that sale bank don't take deposit, don't give loan, they just move dirty money. For example, a bank in a tax haven with no customer, no ATM, like a fake delivery service that does not deliver anything, just hide the package. So what about option D? Sale company can only be used during the layering stage of the money laundering and have no role in the placement or integration stage. Is it correct? No, this is the incorrect option. Why this is wrong? Because sale company work in all the 3 stages of money laundering. The first stage is called placement, where they deposit dirty cash into the fake business account. Second stage is the layering, where they move money through fake transaction. Third step is the integration, where they invest clean money in the real estate or stock. Like saying a Swiss army knife only open bottle. No, it does way more. So option E, these entities may conceal the beneficial owner and are often located offshore, where access to record is difficult for law enforcement. Is this correct? Yes, it is correct. What does this mean? It means sale company or bank hide the real owner. For example, a criminal owned a Panama sale company but no one can prove it. Like a masked robber, you see the crime but not who did it. So what we learned from this discussion is that sale company, they are the fake business, not real operation. First point, that is option A. It is used for fake transaction, that is called false invoice. Option number B, sale company means fake bank, no real banking, that is option number C. They work in all money laundering stage, not just layering, that is option number D. And they hide honor and plus offshore secrecy. So final answer is option D is incorrect, because incorrect is being asked. Now friends, let's see the last question of today's session. The last question is, which of the following, I think this we have discussed. Yes, let's see the next one. Yes, which of the following statement about the responsibilities of the principal office under the rule 7.2 of the PML rule is incorrect? Option A, the principal officer is responsible for submitting prescribed report to FIU-IND within the specified timeline. Option B, RBI expects the principal officer to be the nodal point in the bank for ensuring regulatory guidelines are operationalized. Option C, the principal officer must formulate and update the bank KYC policy and coordinate with the business unit to ensure KYC AML process are documented in manual, product risk assessment and SOP. Option D, the principal officer has no role in customer risk categorization or adopting due diligence measure in the bank business line. So tell me which one is correct. First of all, let's see option number A. So option number A says principal officer is responsible for submitting prescribed report to FIU-IND. Yes, it is correct. The principal officer must file report like STR, CTR on time to FIU-IND. So you must remember the timeline. Question is asked on the timeline. Like what is the timeline for reporting FI, CTR, STR, etc. So for example, if a suspicious transaction happen, it must report within the 7 days. What about option B? RBI expect the principal officer to be the nodal point in the bank for ensuring regulatory guideline are operationalized. Is it correct? Yes. What does this mean? So they are the go-to person for RBI KYC AML rule. They must ensure every deployment follow the rules. Like a team captain making sure everyone play by the rule. What about option C? The principal officer must formulate and update the bank KYC policy and coordinate with the business unit to ensure KYC AML process are documented. Is this correct? Yes. It means they create, they update KYC policy. They ensure that manual risk assessment SOP are in place. Like a chef writing recipe so that all cooks follow the same steps. What about option D? The principal officer has no role in customer risk categorization.
Right. So the question is, how do we spot the use of money mules in account? Before we get into the option, let's break it down. You know what is a money mule? Do you know what is a money mule? See, this money mules means what? Is like a middleman used by fraudster to transfer a stolen money. So basically money mule is like a middleman. So money mule is like a middleman used by fraudster, right? It is used by fraudster to transfer a stolen money. What is the main motive? To transfer a stolen money, right? This is the main motive, to transfer the stolen money. So money mules is like a middleman used by fraudster to transfer the stolen money. So these accounts often show certain red flag. So option A says that transactions are always done through the third party. Yes, this is the clear indicator. Fraudster usually avoid direct transfer and use third party to hide their track. Remember, third party transactions are always suspicious, right? Third party transactions are always suspicious. Option 2 says that customer or beneficiary is readily available for contact and provide complete transaction detail. So this does not sound like a red flag, does it? Correct. If someone is cooperative and transparent, they are unlikely to be involved in fraudulent activity. So this is not an indicator of money mule. Option C say customer or behavior is unwilling to meet or uncomfortable providing transaction related information. So absolutely an indicator. Why would someone hesitate to talk about their own transaction unless something fishy is going on? It is a big red flag, right? So another valid sign, imagine a student account suddenly showing massive business transaction. It does not add up, right? So it is a fraud alert. Now option D says transactions are inconsistent with the customer profile or business activity. So transactions are inconsistent with the business profile and customer profile or business activity. So friends, what do you think? Option D, transactions are inconsistent. This is another valid sign, because imagine a student account suddenly show a massive business transaction. It does not add up. So here is your takeaway. So what is the correct answer? Correct answer is option B, right, which is not indicator. A, C, D are indicator. So fraudster often rely on secrecy, inconsistency and third party transaction. Let me write it down. The first thing is that fraudster rely on secrecy. Second thing, they rely on inconsistency, right? Inconsistency. And the third thing, they rely on third party transaction, right? Third party transaction. So why they rely on this thing? To use money mules. The main motive is to use money mules, right? So but if a customer is straightforward and cooperative, like in option B you can see, right, then they are not money mule. Okay, I hope this help you understand your concept regarding the money mule. Now let's move on to the next question. Friend, if you want study material for AML KYC, you can just in the description section I have provided a Telegram channel link. The Telegram group link is provided in the description section. Please join the Telegram link. In that Telegram link you will find previous year question. There are almost 500 students who have already given examination or who are preparing for the exam. You can see what they are preparing, what are the questions being asked in the examination. So I request you to please join the Telegram channel in the description section. Link is provided in the description section. Now let's see the question number 2, which is basically on periodic updation. So the question is regarding, as you can see, so the question is bank classify customer into 3 categories. You know it very well, right? So for first of all, question is how often bank is need to update customer detail based on their risk category. Right, trust me, after this you will never forget this number. Right, let's get started. Question is that how often the bank periodically update customer detail based on their risk category. So bank classify customer into 3 categories: high risk, medium risk and low risk, based on how risky their transactions are. You know, depending on the category, bank must regularly update their record. Let's look at the time frame for each. Now, first of all, let's talk about the high risk customer. First of all, let me tell you the fact. So if we talk about the high risk customer, these are the one bank keep a close eye on because their transaction could be tricky or prone to fraud, right? Their transaction could be tricky or their transaction could be prone to fraud, right? So for them, bank update their information every 2 years, right? Bank update their information every 2 years, right? Simple to remember, high risk is equal to 2 years. Now next we have medium risk customer. Next, we have medium risk customer. So these folk don't pose as much risk but still need monitoring. For them the updation happen every 8 years. For them the updation happen every 8 years. Think of this as a mid-level check in our safety. And finally we have low risk customer. For low risk customer, these are your super safe customer, like someone with a simple saving account and no unusual activity. For them, bank update detail every 10 years. For them, bank update detail every 10 years, right? So low risk is equal to long time is equal to 10 years. So here is a quick recap: high risk every 2 years, medium risk every 8 years, and low risk every 10 years. So it is easy to remember once you break it down. Now let's see the option. Option A says that once every 3 years for high risk, 8 years for medium risk. This is wrong, right? Once every 2 years for high risk, 8 years for medium risk. Yes, correct. Obviously this is correct. Remember, KYC updation is to be done every 2 years for high risk customer, every 8 years for medium risk customer, and 10 years for low risk customer. Option B is the correct answer, right? Please remember it. Now let's see the next question. List MCQ that we have for non face to face customer. It is regarding the non face to face customer. So the question is how to handle the high risk associated with the non face to face customer. You can see which of the following is not required to mitigate high risk for the non face to face customer. Not required. So remember, I have highlighted the not required. Friends, let us first understand this. So first let's understand what this non face to face customer are. You see this word non face to face customer, what does it mean? See, these are people who open account or do transaction remotely without physically visiting the bank. So they don't visit the bank, they remotely open the account. They open the account or do transaction remotely without physically visiting the bank. While this is super convenient, it also comes with higher risk. Bank must follow a strict measure to ensure that everything is legitimate. Let's see the option. Option A says certification of all the document to be insisted upon. So this is absolutely essential. Bank need to verify that the document provided are real. Think of it as security check, right? This is required, right? Option B says obtaining additional document if necessary. Correct again. If the bank feels that something is unclear, they might ask for extra document to make sure everything is in order. So this is also correct. Then allowing the first payment to be made in cash at the branch. Yes. No, this is big no, because allowing cash payment from the non face to face customer could lead to money laundering or fraud. Instead, the first payment must come from another bank account that already follow the KYC norm. This ensures a safe and moral traceable process. So this is a big no. For cross-border customers, certification of document or introduction by a regulatory third party with adequate KYC system. So this is a must, because for customer outside the country, their documents should be certified by a trusted and regulated third party. It is like having a referee who vouches for their identity. So this is correct. So the question was which is not required to mitigate higher risk for non face-to-face customer. So option number C is not required, right? So let's recap. First thing, certification of all the document, essential. Additional document, sometime necessary. First payment in cash, no, not allowed. Cross-border customer must be verified by trusted party, right? Remember, cash payment for non face-to-face customer are like a red flag in banking. Always look for traceable method, right? I hope this question is clear now. So friends, if you want study material related to the AML KYC, we have an app called JIB and CIB Made Simple app. In the description section you will get the link of the app. In that app I have provided AML KYC per unit MCQs, per unit theory portion, per unit previous year question. All these are available in just 200 rupees. So you get the link of the course in the description section also. Just click on that link and you can make the purchase regarding this particular course, right? Now let's see the next question. The next question is in the front of your screen. This question is based on the Vienna Convention 1988, right? Vienna Convention which happened in 1988. This question is regarding that. Let's go through the question. So it is about key measures from the Vienna Convention of 1988. It is about preventing drug trafficking and stopping the flow of illegal money. This topic is exam relevant, so stick around as I simplify it for you. Let's jump into. Question is which one of the following is not a measure mandated by the Vienna Convention? Not a measure. Question is regarding not. Okay. Now Vienna Convention, it happened in 1988. So it was a global agreement focused on fighting drug trafficking, right? Drug trafficking and its financial impact. It listed specific measures to help country crack down on this illegal activity. but not all actions were allowed. Let me explain. So option A says that declaring the conversion or transfer of property from drug trafficking as an offense. See, this is correct. The convention wanted all nations to treat money or property made through drug trafficking as illegal and take a strong action against it. Yes, correct. Option B says that concealing the illicit origin, transfer or movement of property derived from drug trafficking as an offense. See, absolutely right again. The idea was to make it a crime to hide when illegal money or property came from or how it is being moved around. Now let's see the option number C. What option number C says? Option number C says that establishing measure to legalize fund derived from drug trafficking. What do you think? So this one is not true, because the convention was all about stopping the flow of illegal money. This convention was all about stopping the flow of illegal money, right? Not making it legal. So any attempt to legitimize fund from drug trafficking was strictly against its objective. And option D says providing mutual legal assistance, transfer of proceedings and international cooperation. See, this is a spot on. The convention emphasized teamwork among countries. It encouraged sharing legal resource, transferring cases and cooperating internationally to tackle drug trafficking, right? So what do you think is the correct answer? Option number C is incorrect, right? The question is regarding incorrect. So let us recap what we have seen, that declaring conversion or transfer of property mandated, right? Declaring the conversion or transfer of property, this was mandated. Then concealing illicit origin or movement of fund, it also mandated. Then legalizing fund from drug trafficking, absolutely not allowed. How can you legalize? Suppose fund you are getting from drug trafficking, how can you legalize that? You can't do that, right? Option D. Now friends, the next question you can see is based on the Egmont group of financial intelligence unit or FIU. So question is, which of the following is not an objective of the Egmont group of financial intelligence unit? So let's see the option. So options are to promote the development of FIU globally, to cooperate in information exchange, training and sharing, right? Option C says to establish mandatory regulation, and option D says to publish operational guidelines. Let's see the option. So first of all, let me tell you that this Egmont group is an international organization that help financial intelligence unit, that is FIU, around the world work together to fight crimes like money laundering. Now let's look at this tricky MCQ and solve it together. Question is, which of the following is not an objective, right? So let's see the option A. It says that to promote the development of financial intelligence unit globally. Yes, obviously this is correct. You know, the Egmont group focus on building and supporting FIU worldwide to make them more effective. Option B says that to cooperate in information exchange, training and sharing expertise. Yes, this is also correct. Sharing information, training members and exchanging expertise are the key objectives of the Egmont group to help fight financial crimes. Then option C says to establish mandatory regulation for financial institutions to participate in money laundering activity. Yes, this is clearly wrong. You know, the Egmont group exists to stop financial crime like money laundering, not encourage them. Here it is written to encourage, to establish mandatory regulation for financial institutions to participate. No. Nobody encourage it, right? Option D say to publish operational guidance for FIU, Egmont Charter and Egmont Principle for Information Exchange. Yes, this is correct too. Egmont Group provide guideline and principle for FIU to follow in their operation. So here is a quick recap. Promoting FIU globally, true. Cooperation and sharing expertise, this is also true. Encouraging money laundering, absolutely not. And publishing guideline for FIU, this is correct. Right, and that is the Egmont Group in nutshell. I hope this clear your concept. What is Egmont Group? Now let's see the next question that we have. It is regarding the multiple tier of account. So what is multiple tier of account? Let's discuss. So friends, question is, what does multi-tier structuring aim to achieve? What is the primary objective of using a multiple tier account structure in financial transaction? Options are simplify the tracking of fund for regulatory authority, to pass funds through multiple account by splitting them at each stage, making tracking difficult. Option C says to ensure direct and transparent fund transfer between account, to reduce the number of account involved in financial transaction. So what is your guess? Let's decode each option. Option A says simplify tracking by making fund easier to trace. This is incorrect. You know, multi-tier structuring is used to complicate things, not make things simpler. Option B says to pass fund through multiple account by splitting them, making tracing difficult. Exactly correct. Because you know, the idea behind multi-tier structuring is to move money across various accounts in a small chunk so that the tracing the origin of the fund become almost impossible. Option C, to ensure direct and transparent fund transfer between account. So this is red cross. Why? Because the method is designed to make transaction flow as opaque and confusing as possible. Option D say to reduce the number of account involved in financial transaction. This is also incorrect, because multi-tier structuring increases the number of account involved, making it harder for investigator to follow the money trail. That is why option number B is correct. So here's a quick recap. Option A, simplified tracking, no. Option B, pass fund through multiple account, yes. Option C, create transparency, no. Option D, reduce account involved, no. Now let's talk about the funnel account. Which of the following statement best describe the concept of funnel account? So what is the funnel account? Let's see the option. So first option is a bank account used for depositing illicit fund from multiple individual, usually in amount below the reporting threshold, and withdrawing them from distant location. Option B says a type of saving account that offer higher interest rate and tax benefit. Option C, an account where only one person can deposit and withdraw fund without any restriction. Option D, a government regulated account designed to track large transaction for anti-money laundering purpose. So option A says that a bank account used for, this is regarding the funnel account, best describe the funnel account, a bank account used for depositing illicit fund from multiple individual. So what do you think? Is it correct or incorrect? So see, this is absolutely correct. Funnel account are specifically designed for money laundering. People deposit a small amount of money into this account, small enough to avoid suspicion, and then the money is withdrawn from different location, making it hard to trace. So it deals with a small amount. First thing is that it deals with a small amount, right? It deals with a small amount. People deposit a small amount of money into this account, and small enough to avoid suspicion, and the money is withdrawn from different location. A small amount and different location. These are the two keyword you need to remember. A small amount and different location, right? So the money is withdrawn from different location, making it hard to trace. Now option B says a type of saving account that offer higher interest rate and tax benefit. See, this is incorrect because funnel account have nothing to do with saving or interest rate. They are used for illegal purpose, not for legitimate saving. Option C says an account where only one person can deposit and withdraw fund without any restriction. This is also incorrect. Funnel account involve multiple people depositing money, not just a single person. Option D says a government regulated account designed to track large transaction for anti-money laundering purpose. What do you think? So this option is also incorrect because funnel account are not government regulated. Clearly written government regulated. No. This is not government regulated account. Right. In fact, they are used to evade detection by authority. So here is a quick recap. Option A, yes, that is correct. Funnel account are for a small deposit and withdrawal across distant location. Option B, a type of saving account that offer higher interest rate and tax benefit. No, they are not saving account. Option C, an account where only one person can deposit. No, multiple people are involved, not only one person. Option D, government regulated. No, this is not regulated by government. So we can see option A is the correct here. Right, option A is the correct answer here. Now let's move over to the next question. Let's move to the next question. The next question, as you can see, this is the type of case study which has been asked in the previous year examination. Let's go through the case study. So the question is like a businessman Mr. X generate large amount of cash through illegal activity. To avoid suspicion, he deposit a small amount of this cash into multiple bank account under different name. Some of this money is even smuggled abroad and deposited in foreign bank where regulation are more lenient. Despite banking regulation on large cash deposit, Mr. X cleverly avoid detection and integrate his illicit fund into the financial system. So this is the case study. Now question is, which stage of the money laundering process is Mr. X engaging in? Placement, layering, integration or structuring. You know, these are the stages, and you must be clear with all the stages because question is asked every year from stages, right? So which stage is involving in? What do you think? First option say placement. Yes, absolutely correct. Placement is the first stage of money laundering. This is where illegal cash is introduced into the financial system. Mr. X deposit a small amount into multiple accounts locally and internationally, which makes it hard for authority to track the fund. So smuggling fund abroad is another classic placement technique, right? So this is correct. Placement is correct. Layering. See, this is incorrect because layering happen after placement. First placement occur, then layering occur. So layering involve moving the money through a series of complex transactions, right? So what do we do in layering? That we move the money through the series of complex transactions, right? Series of complex transactions. So it involves moving the money through a series of complex transactions to obscure its illicit origin. So Mr. X has not started doing that yet. So this is incorrect. Integration also incorrect because integration is the final stage of money laundering where the laundered money is mixed with legitimate fund and used for legal investment. So what happened in integration, as the name itself suggests, laundered money is mixed with what? It is mixed with legitimate fund, right? So it is used for legal investment. So it is Mr. X is not at this stage yet. And option D says structuring. So structuring, this is incorrect as well. Structuring involves breaking large cash transaction into a smaller amount to avoid reporting threshold. So while Mr. X is depositing a small amount, he is also smuggling money abroad, which does not fit the definition of structuring entirely. So let's recap. So option A, placement, yes, that is the correct answer. Option B, layering, no, that is not the next stage, that is the next stage after placement. Integration, you know, this is also the last stage. And structuring, not quite. Mr. X action goes beyond structuring. So the key takeaway is that placement is the starting point of money laundering. It involves introducing illicit fund into the financial system, often through method like small deposit, smuggling, or using multiple account, right? So hopefully this concept is clear now. So we know what is a placement now. Let's move on to the next question. Everything is explained clearly in this particular PDF. This is available in our course. Now this is another scenario in front of you. So what is happening in the scenario? So let me share a story. Imagine a businessman, Mr. X, who earned tons of cash from illegal activity, right? Tons of cash from illegal activity. Say things that he should not be doing. Now he can't just walk into a bank and deposit all that cash, right? It will raise red flag with authority, right? So here is what he does. He deposits a small amount of money into multiple bank account under fake name to avoid suspicion, right? So then to make it even trickier to trace, he smuggles some of his cash to foreign country where bank rules are more relaxed. Despite a strict regulation, Mr. X cleverly dodges detection and sneaks his dirty money into the financial system. Sound like a movie, doesn't it? Now here is the question for you. Question is, which stage of the money laundering process is Mr. X engaging in and what technique is he using? Placement, layering, integration, or structuring? Similar question like the previous one, right? So obviously I think it is repeated. We have already discussed it is placement. So I think this question gets repeated. Now let's talk about the Havala system. Let's talk about it, Havala system. So friends, the question is in front of your screen. So question is, which of the following statement correctly describe the Havala system? First, let me talk about what Havala system actually is. Imagine you need to send money to someone in another country. So you are in India and you need to send money to US, someone in USA, okay? But you don't want to use traditional bank transfer. So you could go to a Havala broker who had a network of other broker in the recipient country. Instead of a bank transfer, you hand over the money to one broker and the other broker delivers the fund to the person you are sending them to. What I am saying, that you could go to Havala broker who had a network of other broker in the recipient country. So in India, you go to a Havala broker and that particular broker has a recipient of broker in other country, in the recipient country. Instead of bank transfer, you hand over the money to one broker and the other broker delivers the fund to the person you are sending them to. Simple, right? But here is the catch. These transactions are not documented and there are no paper trail, right? So now let's look at the question based on this system. So first option, let's say that it is a regulated first option say it is a regulated system, a banking system that ensure all transactions are documented. No. See, this is incorrect because the Havala system is not regulated by any government authority. There is no paper trail and no official monitoring, which is the opposite of a regulated banking system. Option B says that it operates outside government control, enabling undocumented deposit, withdrawal and fund transfer through a network of broker. Yes, correct. The Havala system operates without any formal regulation or banking oversight. It is based purely on trust and a network of broker. So there is no paperwork, no documentation, no government monitoring. This make it an attractive option for people who want to transfer money secretly, but it also make it a system linked to illegal activity like money laundering and terrorist financing, right? So option B is correct. Option C says that it is a financial system where funds are transferred only within the same country, avoiding any cross-border transaction. No, this is wrong, right? So why? Because Havala is not limited to domestic transaction. It is frequently used for cross-border transfer. Option D said it is primarily used for legal business transaction and leave a clear paper trail for tracking money movement. So while some might use it for legal purpose, the Havala system does not leave a paper trail. In fact, it is often linked to illegal activity because of the anonymity it provides. So what we learned today, that Havala system is an informal way of transferring money without any government oversight or formal documentation. So it operates through a broker who transfer fund across border, no paperwork or official record, making it nearly impossible to track. While it can be used for legal purpose, it is often associated with illegal activities like money laundering. Right? I hope this explanation helped you to understand the basic concept regarding the Havala system. Now let's move over to the next question. So the next question is Watergate scandal and money laundering. Let's talk about. Question is, when was the term money laundering first used in the press and in what context? Very good question. So when was the term money laundering used? Let's rewind to the early 1970s. Imagine a major political scandal unfolding in United States. In 1972, something huge was happening and the term money laundering was making its first appearance in the media. But how did it all begin? Let's look at the question based on this. So we have the question here. Let's go through the option. Option A says that in 1988 by the New York Times in relation to the Iran-Contra affair. No. While the term money laundering was used in 1980s, it wasn't first used in 1988. It is certainly not in connection with the Iran-Contra affair. So option A is wrong. Option B says in 1972 by the Guardian in connection with the Watergate scandal. Yes, correct, absolutely. The term money laundering was first introduced in public in 1972 by the British newspaper The Guardian. It was used in the relation to the Watergate scandal, one of the biggest political scandal in US history. This scandal ultimately led to the resignation of the US President Richard Nixon. So it was so used that the US President had to resign. Richard Nixon has to resign. In 1955 by the Washington Post regarding the Enron financial fraud. No, this is also incorrect, because the Enron financial fraud happened much later in 2001 by Times during the investigation of 9/11 attack. No, this is also wrong. So hopefully you have understood that it was first time used in the 1972 by the Guardian in connection with the Watergate scandal by the US. Now there is some question on OVD. OVD means officially valid document. Which of the following is not considered an OVD for identity and address verification in India? Passport, driving license, Aadhaar issued by private company, and voter identity card. So which is not an OVD for identity and address verification? Very good question. So in India, OVD, this obviously valid document, is a government issued document that is used for identity and address verification. But when it came to Aadhaar card, only those issued by the UIDAI. Here you can see Aadhaar card issued by private company. This is wrong, because Aadhaar card which is issued by UIDAI, right, or NPR, National Population Register, right, they are valid for verification purpose. Aadhaar card issued by private company are not valid. That is why option number C is incorrect. Right, C is correct. Passport is valid. Right, passport is government issued OVD. Driving license is also valid. This is another government issued OVD. Aadhaar card issued by private company. This is wrong. And voter identity card is also wrong. This is issued by the Election Commission of India and is considered a valid OVD. Right. So what we have seen, the option number C is wrong. Friends, as you can see, we have several other questions, but we will cover it in our paid course. So the rest question you will get in our paid course. If you want to enroll, these are the OVD available. So if you want to enroll in our paid course, you can WhatsApp me on this particular number. Either WhatsApp me on this particular number, or you can, in the description section I have provided link of the course. You can get through that particular course, and do join our Telegram channel for more update related to this examination. So that's all for today. These are the questions which are more and more available. Thank you.